Most insurance mistakes don't announce themselves. They sit quietly inside a policy that was never reviewed, a limit that was never updated, a contract nobody read carefully, or a coverage gap that nobody discovers until a claim arrives. In this video, I'm going to walk you through 6 specific insurance mistakes I see business owners make all of the time, and more importantly, what you can do to avoid them. I'm Brian Woods with Integrity Insurance and Risk Management. We work with business owners, commercial real estate investors, and independent producers who are serious about protecting what they've built. On this channel, we break down insurance and risk management in plain language. No jargon, no fluff, just the things that actually matter when something goes wrong. Let's get started. Mistake number 1, treating the annual renewal as a formality. Every year your business policy renews. Every year the premium gets paid. And for most business owners, that's the entire annual insurance process. The problem is your business isn't the same as business was last year. Revenues change, payroll changes, employee counts change, services evolve. You may have added vehicles or locations or equipment, subcontractors, or entirely new lines of business. You may have signed contracts with insurance requirements that didn't exist a year ago. None of that automatically shows up in your renewal. When there's a claim, the insurance company evaluates the policy that was in force, not the business you thought you were covered for. The business that manages risk well treats insurance as an ongoing process, not a once-a-year transaction. Mistake number 2, insuring property at the wrong value. Your property coverage is only as good as the limit you've selected. And one of the largest issues I see right now is commercial properties being insured using values that haven't been updated in years. Construction costs have increased dramatically. Labor costs have increased. Material costs have increased. And rebuilding a commercial building today is very different from rebuilding one 5 years ago. If your building suffers a major loss and your insurance values are based on outdated numbers, you may discover that you're underinsured. That can lead to co-insurance penalties. It can lead to insufficient claims payments. It can leave you writing a very large check after a loss. Especially here in Florida, every commercial owner should periodically review replacement cost values and compare them to what's currently reflected in the policy. The number often surprises people. Mistake number 3, thinking general liability insurance covers everything. This is probably the most common misconception in commercial insurance. Many business owners view general liability insurance as a catch-all policy. If something goes wrong, general liability handles it. That's not how it works. At a high level, general liability insurance is designed to address 3 primary categories of exposure. First, bodily injury to third parties. Second, damage to someone else's property. And third, certain personal and advertising injury claims such as libel, slander, or defamation. If a customer slips and falls at your location, that's generally a bodily injury claim. If your employee accidentally damages a client's property while performing work, that's generally a property damage claim. If your business is accused of defamation in advertising or marketing, that may fall under personal and advertising injury coverage. What general liability does not cover is important. It generally does not cover professional mistakes. It does not cover employment-related lawsuits. It does not cover cyber incidents. It does not cover injuries to your own employees. Each of these exposures requires separate coverage. Unfortunately, many business owners don't discover those limitations until they're already dealing with a claim. Real quick, if you're finding this useful, subscribe to the channel. We release new content every week covering commercial insurance, risk management, business protection, real estate investing, liability, and wealth preservation. Everything is explained in plain language so you make better decisions before problems occur. Now, let's continue. Mistake number 4, signing contracts without reviewing the insurance requirements. Commercial leases, vendor agreements, client contracts, construction contracts. Almost all of them contain insurance requirements, minimum limits, additional insured requirements, specific endorsements, waivers, indemnification provisions. The problem is many business owners sign the contract without verifying that their insurance program actually complies with those requirements. Now you've made a legal commitment to your insurance may not support. That becomes a problem when someone requests proof of coverage. It can become a bigger problem when there's a claim. And it becomes a very expensive problem when attorneys start to review contracts after a loss. Insurance and contracts should always be reviewed together. Mistake number 5, assuming excess liability and umbrella liability are the same thing. This is one of the most misunderstood areas of commercial insurance. You'll hear people use the term excess liability and umbrella liability as if they're interchangeable. Sometimes they function similarly, but that's not necessarily the same thing. An excess liability policy generally provides additional limits above the underlying policy. Think of it as more of the same coverage. For example, if your general liability policy has $1 million limit and you purchase a $5 million excess liability policy above it, the excess liability policy generally responds after the underlying limit has been exhausted. It's providing additional capacity. A true umbrella liability policy can do that too, but depending on how it's structured, it may also provide broader protection than the underlying policy. In some situations, an umbrella liability policy may help fill certain gaps between underlying coverages or provide broader terms than a straight excess liability policy. The key point is this. Don't assume that because you have an umbrella liability policy or an excess liability policy that they're accomplishing the same thing. The structure matters. The policy language matters. And the differences usually become important only after a serious claim occurs. That's exactly when you don't want surprises. If your business has significant liability exposure, it's worth understanding exactly what sits above your primary policies and how it's designed to respond. Because large lawsuits can burn through primary limits much faster than most business owners realize. Mistake number 6, not telling your insurer when your business changes. Businesses evolve. That's a good thing. But when operations change significantly, your insurance program may need to change too. Maybe you've expanded into a new service line. Maybe you've entered a new state. Maybe you've acquired another company. Maybe you've doubled your revenue. Maybe you're using subcontractors differently than before. These changes matter. Insurance companies underwrite based on the information provided to them. When material changes occur, those changes should be communicated proactively, not after a claim. The best approach is simple. When your business changes, have a conversation with your insurance advisor. That small conversation can prevent major problems later. If this video was helpful, share it with another business owner, investor, or operator who needs to hear it. And if you haven't already subscribed yet, make sure you do so. We release new videos every week focused on insurance, risk management, business protection, commercial real estate, and wealth preservation. If you'd like an independent review of your current insurance programs to identify coverage gaps, contracts issues, valuation concerns, liability exposures, that's exactly what we do at Integrity Insurance and Risk Management. I'm Brian Woods. Thank you for watching, and I'll see you in the next one.